Hello, this is Patralek and welcome to my channel. Today we'll be discussing about explainable AI. So, what is explainable AI? Let's take an example. So, so, so there is an AI system, and you're using the system to get some recommendation or solve some problems. If, for example, there's a loan application. So somebody has applied for a loan, you pass it through the system, you give it to the system, and the system says yes, approved, or no, it's not approved, right? Or you are using it in a hospital to diagnose some medical condition. Diagnose medical condition. Again, it goes to the AI system and it says something that the diagnosis is positive or negative. Or you're just looking for say for example a vegan restaurant, right? And you ask an AI system to make a recommendation, and it makes a recommendation that in this area, this ABC is the best vegan restaurant as per your choice. Now what happens is, with AI systems, we're not sure if this yes or no is right or wrong, right? So there is always this question mark. Is this response that we have got, is this a right response, right? Is this right? Can I trust this or not? Did it hallucinate? Did it give me, I was asking for a vegan restaurant, and did it give me the best steakhouse in that area? Did it hallucinate, right? Did it give a wrong answer? So all those things are pretty much in our mind, and we always try to figure out, you know how to, whether to trust this or not. So what is happening today is, there is this trust. So there is this trust, whether I can trust the system or not, and then there is doubt. And what XAI is doing is it is bridging this gap. So what XAI will do is it will transparently tell you how this AI system arrived at whatever decision or conclusion or result it arrived at. So how, what went into this? What made the system give this result? Right? So that is what explainable AI or XAI is going to give us. And that will help us adopt AI in a big way. So this is going to be, big. Let's take an example. So here is Mr. John Doe, and he has applied for a loan, right? So this person has filled a loan application. Now what happens? What happens is we are using an AI system to get the response or to run this loan application for the approval. Now this AI system says John Doe is going to, has a default uh, uh, probability of 70%. Now let's see how XAI is going to help us look into how the system came to 70% defaulting. So essentially what is going to happen is this system is saying uh, John Doe has a probability of 70% defaulting, and hence this loan application is rejected. Right now, you might want to understand why it said so. So let me you know let me take you to one of the systems, or one of the ways in which XAI is going to tell you, um, or give the reason, or bring that transparency into this whole mix. And that tool, or that method, is SHAP values. So what we'll be looking at is SHAP values. And to explain SHAP values, or how it works, uh, let's take another example. So there are a bunch of friends. They go out for dinner, and then based on whatever they ordered, they receive their bills. So this is the total bill, and friend A gets this, friend B gets this, friend C gets this, D gets this, E gets this, and so on. Right? So based on what they ordered, they are getting their bill. So if somebody ordered less, they're getting a lesser bill. If somebody ordered more, they are getting a bigger bill, right? So based on the weight of uh, each of these, they are getting their total share in the bill. And that is how SAP also works. Now, let's go back to our loan application and see how SAP numbers will be given, right? So now what we are going to do is, um, so this is the default value of this is the baseline value, 40% for loan default. Okay. So basically what this means is, any application that comes in by default, it has a loan default rate or probability of 40%. Now, in case of our Mr. John Doe, let's look at the different factors and how these factors are going to affect this. Those factors can be will be or can be credit score, income, existing debts, history, etc., etc., right? So again, what we are going to do is, on this line we will start drawing some lines based on what John Doe's application contains. So first, John Doe has a good um, John Doe has a good income. Okay, so since he has good income, the good income has 5%. So that brings down the defaulting probability by 5%. So since this person has good income, he's less likely to default on the loan. So that is why a negative 5%. So that becomes like here 35%. Now just looking at that number, this person is well off, and he comes below the baseline value. Second is, John Doe has been working continuously for 15 years. He has a stable employment. Now, a stable employment again brings you down by another 5%. So this was for you know this was for income, good income. This is for employment. Uh, Now, similarly, say for example, he has a very good previous history. So that again gives him an advantage of another minus 5%. So that is good history with the bank. Okay. So essentially, if I look at these three parameters, what SAP is saying is minus 535, minus 530, minus 525. So right now, John Doe is standing at 25% default probability. But now let's look at some other factors that John Doe has. Right, John Doe has a say, for example, he has significant debts. So the income to debt ratio, that is, not good, not looking good. He has a lot of or significant debts. Now, significant debt itself is giving him a plus 15. Now, another thing that John Doe has is a bad credit history, right? So that gives him another 20% plus 20%, right? So what happens is he had come down to 25, but now it's plus 15, that is 40, and plus 20, it is 60. And say we have another factor or another feature coming in, which is market stability, right? And market stability is adding another, say, 10%. And why? Because market is not stable at this time. So if the market is not stable, that means employment may be impacted. If employment is impacted, income is impacted, and all those things. It's a circle. So what is happening here is, because of all these negative things, you know the defaulting rate is going up. So what all things we have looked at here? This is significant debt. This is credit score, and this is market instability, right? So with all these things, what has happened is John Doe has reached a default rate, a default probability of 70%. And this is what we started with. Now, how and this particular chart is called force chart, force plot. So on this plot, you plot it in this way. It's not drawn one after other, but anyways, that is immaterial. This kind of thing is called a force plot. So SHAP has helped us give a reason. So now we can go back to John Doe and say, this is the reason why your loan application has failed. In fact, banks can even go further and say that, okay, next time you apply for your loan, make sure your debts have come down. So if your debts have come down, this minus 15% might go away, and you might be standing at 70 minus 15, which is 55, right? And if you increase your credit score, you can get another benefit of 5 or 10 points, and then you might be somewhere around say 50 or 55, and 50% default rate is good enough for our bank, and we can give you the loan, right? So this is how SAP can help us bring transparency. Now, it's not just about the bank and the customer. If there is a condition when the regulators come in and say that for a particular reason we are seeing you are rejecting a lot of loan applications, and that can be a regulatory or compliance related issue for the bank, and they have to go back and explain or give data. Now, if we have explainable AI, all that data will be readily available, and the bank can show transparently why all those loan applications were rejected. And in fact, if even before that, the banks can look at those data and train their model further to be bias free, so unbiased, right? So this is how explainable AI is going to help us. This has already come into existence, uh, and some of the companies have already adopted this. Others are going to adopt this, and with this, the AI adoption in itself is going to see a lot of traction. And this is not only for the financial sector, even in case of medical. So if a diagnosis has been done and you want to understand why this AI system gave this diagnosis, you can have something like SHAP and see which features contributed to this and what was their weightage, and then you can be sure of uh, whether the AI system gave you a really good number or not, or a good decision or not, or the right result or not. And this has already been in use in legal departments, in law enforcement, some medical systems, and finance. So that is all I wanted to share. So this is a good thing. If you want to learn more about it, let me know in the comments, and please don't forget to subscribe to my channel. Thank you.